Hello, this is Brian Knutson, advisor with Cutler Investment Group. Today, August 18th, the markets have hit a new high, and by that I mean the S&P 500 has reached another all-time high about 6 months after we reached the previous high back in February prior to the start of this ongoing COVID pandemic. So we thought it would be a good time to check in, reassess the markets, give you some ideas on what we think might happen going forward. So why have we recovered so much value so quickly? There's an old saying that the economy is not the market. This year to date has certainly proven that out. What we have seen is significant returns from a wide variety of companies, not necessarily just the large tech companies you might think of. Those have led returns just due to their size, but we've also seen other companies do quite well. The leading return this year to date for the S&P 500, for example, is Carrier. There's an HVAC provider that was a spin-off from a company called United Technologies. After that would be many of the names you might think about, but we also think there are opportunities out there in some names that you might not think of as well. For example, there are 48 companies, or almost 1 out of every 10 in the S&P 500 is down 40% or more this year to date. So we do not think that we are bereft of opportunities. We just think we need to reassess where those opportunities might be. On a practical level, this would be a good time to think about whether you need to make some withdrawals from your client portfolio, whether that be a taxable account or perhaps even a retirement account. Even though there is not a need to take RMDs this year, it could be a good time to take some money out of those accounts simply because they are oftentimes so large and because you will eventually need to take withdrawals out of those accounts. Perhaps it wouldn't be such a bad idea to take some out at this time and take advantage of where we stand on valuations. For going forward, the thing to think about is not only are stocks at or probably slightly above fair value at this point, but so are bonds. So bonds aren't necessarily going to be your safe haven that some folks might think about, especially with the 10-year treasury right now yielding right about 0.65. If you think about it, the S&P is yielding 2.5 times that much. There is much more volatility there, no question, but it is also providing more yield. Another area that we're looking at that we've advocated for quite some time now is going to be foreign stocks. They are trading much cheaper than we are. Many of those countries are again ahead of us in their reopening phase, and they yield significantly more than US stocks. So again, we think this is a good time to reassess your situation, think about your risk level, think about your withdrawal needs, but we do not necessarily think this is a time for you to sell off of stocks. We just wouldn't necessarily be looking to add a lot to a stock weight at this time either. Good time to hold steady, think about where you stand, talk with your advisor, and make sure you feel comfortable with where your risk level lies. If you have any questions, we always hope that you will reach out to your advisor, and we'll be happy to talk to you about your specific situation. Hope everyone's staying safe. Thank you.